Technical difficulty. We got it. All right. So, Jim, like I was saying, you had Chris and Jerry in here last week in our super cool room. And how'd it go?
Man, that was great. That was a lot of fun.
2 weeks ago, 2 weeks ago, because of Thanksgiving. Yeah.
Yeah, no, it's fun having somebody else in here.
Yeah.
This right here.
Were they smart? Did they say some cool stuff or what?
Yeah, no. Yeah, it was great having different perspective in.
Perfect. Well, let's jump in. I hope everybody had a great Thanksgiving. It's always interesting looking at numbers after a holiday week, right? Holiday week, sometimes you expect the market to have a lull, right? But sometimes I'm surprised. I've had a couple of years where people use the holiday opportunity to go buy and sell real estate. So let's see what we're looking at this time. All right, Rockwall County, we've got 80 active properties. Big drop. What do you see in that?
I think it's kind of a new seasonal is ultimately what I see there, right?
Yeah.
We typically will see this kind of fluctuation, maybe not to that extent. That's a huge drop, but I don't think it's anything to necessarily be worried about.
I just think nobody wants to put their house on the market right before they have a whole bunch of people over and cook a big meal and make a big mess, right? So they probably was just and honestly, realtors don't want to do it either. They're like, hey, I'm with my family. I don't want to put a new listing on right before a holiday. So I'm expecting that number to go way up next week. But we'll see, right? I don't think that's indicative of anything other than a holiday.
Yeah, and here's the other thing to think about it, right? Will those people just never sell?
Right.
And so again, if we know that we had a large amount come off, those should be the people that we're targeting right now.
Yeah.
In order to kind of boost our spring, because I in just listening to other realtors right now, I think a lot of people are hearing February, maybe that early March.
Yeah.
But these are the people you need to contact. They're right there for you.
Yeah. Well, I think the cost of waiting is a conversation every real estate agent needs to be equipped to have right now. If I'm talking to a seller and the seller's saying, hey, I want to wait till February or March to put my house on the market, what is the cost of that decision? How would you explain that?
Golly, I thought about a lot about it. And you said a few weeks ago, it's impossible to time out the market,
It
right?
is. Yeah.
Right. Look at Redfin, look at Open Door.
Right.
It's impossible to time out this market. And so I think a lot of people are waiting for that bottom, and they're going to wait long enough for that bottom, and it's going to be bouncing back up, right?
Well, but I also think to a seller, what matters is the affordability, right? So if a certain number of, let's say there's 100 buyers, hypothetically, that could buy the house today, and the interest rate goes up by February, it may take those 100 buyers down to 50.
Yeah.
So then there's half as many people that could afford your house in February that could today, or it could work in the reverse. Rates could go down and it could go up, right? So that would be the conversation you could have with a buyer. But in terms of a seller, affordability matters. A cost of waiting could cost you a percentage of the buyers that could buy your house. Also, let's say prices go down. We've talked about that. If prices go down 5%, what's 5% of a $400,000 house, right? That's 20 grand. So that decision could cost you $20,000 by waiting until February.
Yeah.
A buyer, hey, I don't know, I'm nervous, I don't want to buy now. What if the property goes down? How do you explain that conversation?
I think kind of the same thing. We can always be waiting. I actually had a buyer one time. It was my in-laws. But they were always waiting for it to the market's going to go down. It's going to go down. It's going to go down. And all the market did was keep going up.
Yeah. Right.
We can wait for it to go down so much that we look up and we're like, man, we can't afford the house we could 2 years ago, 3 years ago.
Yeah.
And that's what it turns into. We're always, eventually you will be correct that the market's going to go down, right?
Yeah,
look at what it's doing now. Eventually you'll be correct. And then you'll look and go, see, I told you it was going to go down.
You'll find your own truth, right?
Yeah.
Yeah. Well, I think it's like my wife and I played pick 'em in the stock market during the pandemic. We would go pick these stocks and throw some nominal numbers at it. And you know what I proved to myself is I'm not good at picking it. I'm not good at timing it. I don't study it enough. Nobody really does. It's prospecting, right? Or speculating, I should say. But all that to say, I know those stocks that I played pick 'em with during the pandemic, even though they're worth less today than they were when I bought them, which just goes to show you. But if I hold on to them 5 years, they'll all be worth more.
Yeah.
And that's really the same conversation you could have with a buyer today is, hey, listen, you're not going to be able to speculate when the values can go up, go down. We don't know for sure. We have data that suggests it could or couldn't. But the truth is, if you buy the house today and you hold on to it for 5 years, it'll be one of the best decisions you've ever made.
Yeah, it's a matter of relativism, right? If right now we're already down 5%, 3%, whatever it may be, if we go down another 1 or 2%, but the market goes up 10, well, congratulations, you still bought when the market was down, and then you gain that extra equity back. We don't look back in 2011 and 12 and say, man, you could have got that house for 5,000 less. No. You made a lot of money.
I mean, but the problem is the sellers are looking back 6 months or a year ago and man, I could have sold it for this.
Yeah.
And they got to emotionally get past that conversation.
Yeah. And you have to just educate where the market is now. Yesterday is yesterday.
Yeah.
We're not bringing it back. There's no need, and we can do that. I could do that every day with the stock market, like you said.
Yeah.
If I would have just bought this, if I would have bought this, I used to do it all the time with crypto.
Yeah.
Right? If I would have just sold here, if I would have.
You didn't buy FTX, did you?
No.
All right, good. I won't call you Tom Brady today. All right, so let's run through the numbers. So 30 sold in Rockwall County. It's lower. We expect it numbers wise because of the market. There's 22 pending, 14 active option. No real stories in the numbers this week. Look at the difference in Dallas County. It went from 1,036 active a week ago to 562. Now, think about what that number says. It says that the Monday after Thanksgiving, there's only 562 properties active. My guess is if you looked on Wednesday or you looked on Thursday, that number is going to drastically go up because people were waiting to put their house on the market for the holiday, right? I don't think this is correct. I think it's 322. There's 322 pending, 259 sold, 189 active option. I mean, we can go through all these counties, but I think the numbers are going to tell the same story as drastic reduction in active inventory right now. Active option is a little bit down, pending's a little bit down, and solds are down for the week. It's a holiday week, guys. The good news is if you look back a week, they were healthy numbers before Thanksgiving, right? There was 750 properties active on the market Monday before Thanksgiving. There was 128 active option, 240 pending, 241 sold, right? So those are good numbers in Collin County. If we jump out to the lake, which I understand this is Netris, not Navica, but it gives us a little bit of a representation. They went down a little bit. 13 active option, 12 pending, and 15 sold. Interesting numbers. What do you make of it?
It's our seasonality of where we're at right now. I mean, I'm sitting here thinking about just what the market's doing and just the nature of real estate in general.
Yeah.
And as realtors, we have two decisions, right? We can sit here and be fearful and fret about, businesses going down, but it goes down every December, right? Or we can look at it as there is an opportunity we haven't had in the last few years. I mean, great market, but you had it, you really did have to be creative with how you're drumming up business, especially this time of the year, especially last year. Last year, if you look at the line, it plummeted until February and we had a great March. This year, you're given the tools, right, of where to find the business.
100%. And it's, what's interesting is it doesn't always go down in December. It definitely goes down in January. October and November, they've kind of flip-flop every year.
Yeah.
But you know what's really strong in December? Commercial and investing.
Yeah.
People are trying to maneuver money before the end of the year for tax reasons. So if you have big investors or people that own commercial real estate, you should be in touch with every single one of them right now. Is there any 1031 exchange or any any property we need to get done before the end of the year? I'd love to help you. Do you need to shelter some money? Do you need to buy something? Have you talked to your CPA? Is there a tax strategy? Do we need to buy a new rental before the year runs out so that it helps you tax wise?
Yeah, and there's portfolios out there to be bought.
All right. We're going to talk skill set for a minute. So we're talking about these conversations. So the conversation is, what's the cost of waiting? What's the cost of buying a house today versus buying a house in February? Or what's the cost of selling your house today versus selling your house in February? But I also think another skill set real estate agents really have to be on right now is this contract terms.
Yeah.
And I don't even think this is a skill set that ever leaves the repertoire, right? Like every market dictates different ways to negotiate and dictate different ways to position your buyers and sellers in contracts. So what's hot right now?
Yeah, I agree with you. And I was flipping through here, and you've got the contingencies that are hot. It's so funny. I mean, just the things we haven't seen, and if you're a new agent, you got to make sure that you're getting informed about the addendum, what it says and doesn't say, so you don't get yourself in a hot situation. Concessions, make sure you're talking to lenders about how much the seller can contribute, because that's a bad conversation later on.
Well, especially because we didn't even have this pre-pandemic. Sellers didn't really pay discount points for, and we're going on almost 15 years since the last time sellers have paid discount points. So that's hot in today's market right now with the emotional feeling around interest rates, right? Like that's a concession. Contingencies. Would you take a contract on a listing right now with a contingency to sell of another property?
Yeah, depending on what I'm selling.
Yeah.
Right. I mean,
you wouldn't even have thought it in the last couple of years.
Right. You have to be very wary about the area that you're selling and what's happening in there, because you don't want to hamstring yourself. But no, absolutely, for the most part.
100%. And then interest rate buy downs, we talked about that. Assumable loans. I know they're there.
You keep talking about it.
I don't know anybody that's done one. But everybody tells me it's an option. So I'm looking, if somebody out there has done one of these assumable sales, I want to know all about it. And we may even have you come sit right here next week and tell us about it. Because I think it's a real product. Like, I just don't know anybody that's done one yet.
Yeah, Patty, if you talk to her about whenever she got started, that's how that she just marketed assumable loans.
Yeah. Well, maybe we need to have her come sit in here. Owner financing. Here's a investor tip. Have you ever searched the MLS for seller financing?
Yes.
And so you realize you could buy as many properties as you wanted, seller financing, that never shows up on your credit report. And it doesn't go against the criteria that Fannie Mae would hold on FH or insured loans, right? So it's an investor trick, right? Mm-hmm. But it's also an interesting thing right now, I think.
Yeah, no, absolutely.
All right, so escalatory addendums, offering over asking price, that's what's not hot right now. We've talked about it on here before. I remember when I was selling real estate, I started in 99. And I remember consulting buyers saying, hey, typically most houses sell for around 95% of the asking price.
Yeah.
And it was just kind of understood that there was about 5% fluff in an asking price. And I could set that expectation, and 99% of the time, that's about what we get the house for. What do you think that expectation looks like today? I'm gonna buy a house and I'm looking at something listed for 500,000. What do you think I would buy it for?
Again, the smart answer is it depends on the area.
Of course.
Right?
Give me a
Because
generic answer. Yeah.
you're going to pin me here.
Yeah.
Honestly, I don't know. Things have changed so quickly. It's going to depend by the county. It's going to depend by inventory. These things are going to change fast.
Yeah.
That was the one thing I wrote down about this article is this what's not can actually be what's hot again come June, May. But this can change really fast. And where we may be at, for a long time, we were sitting at like 101% the last couple of years.
Yeah.
For Rockwall County, I know for a while we were sitting at the pre-pandemic around 97.5 to 98.
So 3%.
Yeah.
Yeah. So I was thinking as I'm just sitting here listening to you, $500,000 property, 5% would be 475.
Yeah.
I don't think a lot of sellers would take 475 right now on a $500,000 house. But if we did 3%, what's that, 15 grand out there with 485? I think there's a realistic 485 on a $500,000 house right now.
Yeah.
And the reason I think that's important is I think it's when you're an agent and you're consulting a buyer, you kind of have to know how to go about the negotiating process, right? And you have to kind of have an expectation of where you're going to land. So there's a skill set to that, right? And it's a new skill set to some, because basically they were trying to figure out how much over to pay. Now we're trying to figure out how much under to offer. And wow, how fast things change. But I don't know. I think 3% is probably a safe number right around now. And I'm being very general. So obviously Jim is absolutely correct. It's a deeper conversation, but for purposes of today, we're going to go with that. All right, let's run through some other articles. In the Dallas Business Journal, it says housing market set to rebalance. Zillow reports. What did you make of this when you sent this one in?
Yeah, it's there was a lot of nuggets out of here. It was really interesting looking at the what the home buyers were saying, or the agents were saying, the feedback that they're getting from sellers, right? That the biggest misconception out there was the prices are going to continue to fall, and buyers thinking that they should wait for mortgage rates to come down.
Yeah.
And we've talked about that conversation, right? I mean, there are options out there where you don't have to, because that's just going to cost you money in the long run, or in the short run, really. But Gary said, and we got to stop converting and we got to start educating, right? Yeah. That's our new.
Well, that's the purpose of this whole call, right? Like give the people the language to take to the consumer, right?
Yeah. People don't want to be sold to, so you have to get the narrative of how to explain this. And so one of the biggest things I took out of this was we have to be able to sit down, and if we know that 50% of the people we're going to sit down just have this bad misconception that everything's going to continue to go down, then we have to know how to combat that and how to sit down and calm those fears.
What do you think?
As far as,
are you in the 46% that say they're not going to significantly fall?
No.
Are you in the 54% that thinks they will fall?
Yeah. So all right, I thought
what's significant? There's two words here. Are they coming down, and is significant in there?
Yeah. Like I said a second ago, it's all going to change fast. And so I sat down and really thought about this because I keep on seeing a lot of articles saying, nationwide, Texas, whatever it might be, by this time next year, we may be up 1%, but relatively even, right? And if you look at the charts right now, we've got a low in sales, right? And if last year's kind of an indicator, and I think it is, we're going to kind of see low sales in January, February, and I think we're going to still see a little bit of a drop in those couple months. Now, with interest rates coming down, all right, follow me here. We saw a 4% uptick in demand.
Yeah.
With supply coming down, right? We just saw that in right. And so
maybe because of the holiday, we're waiting to see.
Yeah. But even so, we may be relatively even, but demand's going up.
Yes,
right?
Of course.
So as demand goes up, prices are going to change. Now, with what we saw with inflation coming down, we saw almost a half a point in change of interest rates, right? If you look back at Gary's slides at Mega Camp, the demand changed between 5.25% and 5.5%. So we all of a sudden went from 7% interest rate down to 6.5% in 1 week. That's how quickly this can change. And the closer we get down to that 5.5%, 5.25%, the market can easily flip because we are still sitting at 3 months of inventory.
I think it's an uneducated prediction. I'll give you that. But I think by March next year, we're going to know for sure what we're dealing with.
Oh, yeah.
And I almost feel like the industry wants us to have a 5.5% interest rate by March next year.
Yeah.
Now, the Fed doesn't, but the industry wants it to happen. And two, everything I'm reading talks about new home construction thriving in Dallas-Fort Worth right now. And that's not the same story in the rest of the US.
Yeah.
So I think that's going to be a saving grace for us a little bit.
Yeah. For us that kind of stick this out, it finished my thought a second ago.
Sorry.
No. Yeah, if we're going to have a few months that are coming down, that means we're going to have a few months that are coming up, right?
Oh, yeah.
And so we're going to have this downshift, and then all of a sudden we have, inflation going down, interest rates going down, and it's going to upshift back up. So no, I don't believe that we're going to have this drastic drop, and we've already seen that start happening.
I don't either. And I think you may see some properties sell for a discount, but I still think I'll repeat what I say a lot is you got to be careful just because if a property sold for less than asking price or a property sold for or they had to do a price reduction, that doesn't mean the price depreciated.
Yeah.
The relationship to what the house was worth a year prior determines what the actual price appreciation or depreciation really is.
Yeah.
So, all right. The other article on the Dallas Business Journal was just what I was talking about. DFW new home sales rise, bucking national trend, but prices fall. When they say prices fall, what does that mean?
I think new builds are slashing their prices a little bit to get product off. Because one thing that there's a lot of on the inventory side is new builds.
Yeah.
Right. Because whenever the market started shifting, they didn't just stop all their construction. They finished their construction. So you can look at permits right now, and permits are down. Right.
So here's the number. And Bid Caballero, they always call him for quotes. The prices fell in October from 502,686 to 500,437. Is that really newsworthy?
Nope.
I think it's attention grabbing.
That's
that's not even like maybe it. Okay, I get it. What's that? 4%, 3%?
3. Yeah, just under. Yeah.
Whatever. Okay, but at the end of the day, DFW new home sales rising, bucking national trend is going to be, I think, a real big saving grace for us, and I'm excited about that. Here's one I really want to focus on this week. Mortgage rates dropped faster this week than any time in the last 40 years. So I think there's going to be short-lived opportunity inside of a cloud or inside of a storm if we're on it.
Yeah.
So had you been paying attention, you might have had a buyer that was a little frustrated with what a payment was going to be or what they could afford. And that dip in interest rate changed the game $100 a month on a median priced home. So what about a double the median price home? It was a $200 a month game, right? Like, so does that change somebody's affordability? Maybe a first-time home buyer.
Yeah,
right?
Absolutely.
Yeah. But it is opportunity inside of it all. You just got to find it, right?
Yeah, no, a lot of times we get in these situations and we feel like this is where we're at, right? Like it's not going to change. We're in this for the long haul. And I always remember whenever the lake went dry or somewhat dry, right? And everybody thought, oh man, this is the lake now. This is never going to change. Like how do we get that much rain? And I remember talking with somebody in the city and he just kind of made this throwaway comment, if we had one good week of rain, they'd fill that
It'll
lake
fill
back
it up.
up. And I thought, man, you're crazy. And sure enough,
We
did.
thought we had to have hurricanes come through
Yeah.
to fill it up, right?
Yeah, no, absolutely. But that's all it does is just a little bit of change, and this can all
Overnight.
flip
Overnight.
quick.
Overnight. All right, last article, Jim, is this, got a new referral, 10 thoughtful tips for thanking the referrer. I'm gonna throw this comment out there. I think smart agents and successful agents have a referral strategy as a part of their business.
Absolutely.
And it can look different to different people. It could just be simply a social media drip. It could be an email newsletter campaign. And other agents are very, very more networky. Maybe I can say it that way. I think this is a big part of building a successful business that's pretty cost effective, if not free.
Yeah.
Right.
No, absolutely. One of the things I thought of is you have to reward people for their behavior, right?
Yeah.
And you think of Pavlov's dog and that whole process. Or right now, I've got a new puppy, and when I want them to do something,
You got hair on your pants.
oh
Good.
gosh, it's awful. Hate that dog. But you have to reward them when he does the behavior. So whenever somebody does something that you want them to do, you have to reward them for that behavior, and you have to expect it. So don't get lazy, don't get cheap. Two big things that we get really quick, right? Because if you reward that behavior, they'll keep doing it.
Very, very true. I mean, it's some people ignore their database, which first of all, that's step one. But having a database of referring agents is certainly extremely strategic.
Mhm.
And I would encourage people to make that a part of their 2023, if it's not already part of your business plan, right? So anyway, I was just checking to see if we had any questions or comments on the Facebook. We're not really good at looking at the Facebook while we're on here, but of course now I don't even see it. So we're going to trust that if you have some good questions or comments, you'll reach out to us, and we're here.
No, absolutely.
Rock and roll. Bye, guys.
Have a good week.